So thank you very much for the opportunity to speak here. I really enjoyed the conference, and I will try to give you some idea about sustainability issues in Slovakia. As you will see, I would say 99.9% of the issues do not really or are not that relevant in Slovak context. So I will try to explain what is the Slovak context, and if our Polish colleagues, but also Martin, somehow complained about the volumes of their respective markets, you will see the Slovak context. It's way smaller. So this will be the context. I will also talk very briefly about the general approach towards sustainability issues, and also a little bit about one research that we did that highlights how companies take seriously or not non-financial reporting, and this also then reflects on the financial markets. So first of all, in Slovakia, it's still somehow considered that sustainability issues, they come next. They come after we catch up. And there is this mantra of catching up of everything. So there was this famous quote in 1994, our former autocratic prime minister, he said in 1994, "In 5 years we will be like Switzerland, no worries." Of course, never happened, and of course it's not going to happen that soon. So still idea of catching up. That means sustainability comes afterwards, after we do something, and this goes all through the fibers of society. That means we do not focus really on these issues. What is more important, we really deeply focus on corporate transparency, public finance transparency. These issues are very strong. Financial consumer protection. This is the area where also Slovak regulators, they work very deeply in. And market integrity, since we had a few Ponzi schemes in early capitalism, this is still an issue. So I'll talk briefly about Slovak corporate structure. So first, it's quite clear, evident almost, that Slovakia, the equity capital market is very small. When you look at Bratislava Stock Exchange, you really have a few dozens of issuers, companies. It's basically only 14 companies that run something, but this something is actually 11 million a year, the volume of trade. So it's absolutely negligible, of course. And plus, all of these companies, they are within some kind of either closed structure, so that there are a few individual persons who hold 70, 80, 90% of stocks, or they belong to some groups, most prominently Tatra Banka, which is a member of Raiffeisen Group, for instance. We had the VUB Bank, which is a member of São Paulo, Intesa São Paulo. They left, so they squeezed out the remaining shareholders. So again, one less company. So this is this is the reality. So the origins, of course, they can go back to 1990s when there was privatization. There was an idea that people will, come to stock markets. There will be exchanging of stocks going on and a lot of money. But this never happened because people actually lost quite a lot of money in privatization, and this heritage actually continues to these days. So there is not really a lot of trust. This I can maybe skip. It is a little bit better in the debt market. So when you look at corporate bonds, there we see that there is some kind of uptake in the bond market, and a lot of real estate projects are financed now through bonds issuance. Not a lot of typical companies, but at least this is how it looks. So the market capitalization in bonds, that's the blue one. This goes up quite a lot, but stocks, they fall down and don't work actually at all. The overall assets of financial markets, again, you see the predominance banking industry. So what we will probably focus also in the report is look maybe at the bank products more thoroughly. So these are the numbers for the institutional investors. So as you can see, it's for typical funds about 12 billion euros. Again, quite a negligible number in European context. And then the remainder for pension funds, it's up to 15 billion euros. Again, important point is that there is a huge domination of subsidiaries, so multinational corporations in Slovakia. So the majority, vast majority of large or the largest companies that we have in Slovakia, they are either partially state-owned or they belong to large groups. And this of course applies both on financial and non-financial sector. For instance, for domestic credit institutions, you can see that 95% of subscribed capital originates abroad. And they belong to these large groups, as I mentioned. You can also see it in statistics of groups of companies where especially the large groups, you can see that it's 96%. They do have some kind of control from abroad. There are a few lessons from this. One is that subsidiaries, they do not typically seek capital on domestic markets, or domestic meaning the Slovak markets, so they do not really raise much capital there. And plus, of course, in terms of non-financial reporting, they can report to the parent companies, which is a practice that they typically do. So that means the conclusion is that this estimated approach to sustainable finance through capital markets would not really work in Slovak context. Very briefly on these non-financial reporting practices, because this is actually replicated in the financial markets when it comes to the sustainability agenda. We did a research together with Frank Bolt, maybe you know this advocacy group from Czech Republic. They looked into non-financial reporting of Visegrad countries, Poland, Hungary, Czech Republic and Slovakia. And we looked at Slovak, and they did the whole picture. Almost 100 companies were surveyed in Slovakia, as we found that there are maybe 2 dozens that were actually subject to non-financial reporting. We did 10 of those, and we have some results here. So key takeaway, non-financial reporting, no surprise there. In Visegrad Group lags very significantly, also behind the EU, especially Slovak and Hungarian companies. There is very vague disclosure with respect to policies, outcomes and risks. So I have, maybe I can show you specific statistics. This report is of course all published, but what's important is Slovakia is always highlighted by this arrow, and the point is to look at the first line, because this means no information is provided. As you can see, almost always the majority of companies, they didn't even bother to report anything, didn't even mention. Actually, the volume for the rest of Europe, there was about 900 companies that were surveyed. So overall, it was 1,000 companies that were surveyed in the whole EU. Also for risk management, when you look, it's the same case in majority of issues, so climate change, biodiversity, employee matters, human rights. Anti-corruption is interesting. Anti-corruption is a big topic, I think, in all Visegrad countries, because corruption is such a big topic. So they try to, signal to customers, to everyone, to partners that they are anti-corruption. So you have a little bit more data there. And this is also when it comes to policy outcomes, still you can see hardly any specific information presented. The same for climate change, and here we have cumulative results of Visegrad in comparison with rest of Europe. So no specific targets, no actions, no outcomes, nothing is actually named. Risk related to climate change. This is just an information. And here, this is the interesting part, anti-corruption, anti-bribery, where we see that it's kind of comparable. Okay, coming to my third part, sustainability agenda in company and financial law. We did one report under the umbrella of sustainable market actors for responsible trade for the University of Oslo, and there I will just give you very brief highlights of what is the context there. So we see that there is very limited explicit constitutional framework for sustainability agenda in Slovakia. Hardly any landmark cases that we could refer to and use for the purposes of company law or financial law. Slovakia remains a laggard in the implementation of sustainability considerations. If it happens, it's usually just boilerplate, just write down whatever is in the directive. We do not really invent too much, etc. I explain. The logic is we need to, let companies be free, catch up later on. We can discuss issues. So the fundamental issues of company law, these are problems with very fundamental problems with illicit bankruptcy methods, chain mergers of indebted companies, etc. Some interesting ideas, newly adopted Social Economy Act, but still not quite clear whether this goes anywhere or not. Okay. When it comes to duties of board of directors, we have, of course, traditionally duty of loyalty, duty of care. What's interesting is that there may not be any priority towards a specific group of shareholders or towards a specific group of stakeholders over the company's interest. We undertook an analysis whether there could be a case for the board of directors within the actual law that they would try to implement more hardcore sustainability agenda, and we see that this kind of sustainability preference would not work under the Slovak law. At the moment, they would be liable for breach of duty of loyalty, and if they, of course, cause the damages. But actually, what is interesting, in Slovakia, companies may be formed for other purposes than profit-seeking enterprise. So if the company states this clearly in the founding documents, then this may be, of course, permissible. Then the board of directors have something to use. But of course, equal treatment must be secured. When it comes to financial law, the policy there is driven primarily by the implementation of EU law, increased consumer protection and welfare. And this is something that I mentioned. One interesting aspect that we mentioned is the ultimate beneficiary owners register. This is an interesting feature in our legal order. It is an open register of public sector partners. Public sector partner is basically anyone who gets money from state in any way, or anyone who trades with state. So anyone who sells anything to state needs to be registered there. So public tenders especially. And the interesting thing is that it appears to be working, and finally we see who is behind companies. Even when journalists, they were, they suspected that there are some people behind these huge companies. It was not clear, it was never confirmed. It doesn't show in the registers. Now we see that they actually are there, and they pretend that they just bought these stocks. That it just happened just 2 days before they had to register, they bought stocks, and finally they are there. So it works because there is a huge duty placed on especially attorneys who are responsible for these registrations. They have to, they are personally liable for any wrongful information. So this is an interesting thing. So when it comes to specific issues related to sustainable finance, coming back to the core issues, so on the market there is a lot of hype about sustainable finance, but still there is very low proliferation of truly sustainable products. As I will show on the last slide, just last year there was the first ESG fund, mutual fund offered by a bank. This was, there is still almost no one who deals in this agenda. Of course, nothing is written. There is no statewide policy on this. I discussed this with the Ministry of Finance. They have one person dedicated to this agenda, basically transposing directives, and there is no one at the National Bank, which is the regulator at the moment. So it really has very low proliferation. So that means that, of course, there are almost no reports in sustainable finance, whether by the ministry or the regulator or the banks themselves or other financial institutions. Here, just an overview of law. I don't think this is necessary. To give you an idea of how many companies there are on the market, so really a handful of companies, as is logical when you look at the volumes, and there is single regulator, the National Bank of Slovakia. Okay, this was not that. Okay, engagement policy. This was transposed into the Securities Act. Actually, when you look at it, it's really word-by-word transposition. There is no imagination, no creativity. It's basic norm for investment firms, and the others are actually referred from their own acts towards this one. What was clear from the discussion also with the ministry, they consider it basically irrelevant because of low volume, plus if you take into consideration the diversification of the market, for them it's just, they have no capacities to do that at all. The market struggles and is not able to comply with it in any meaningful way. When it comes to transparency of asset managers, again, we see almost word-by-word transposition, no real creativity. And again, this is in the Securities Act, which is the act for investment firms, and there is some kind of reference for asset managers from the Collective Investment Act. When it comes to ESG considerations in investment policies of fund managers, in Slovakia there are no specific rules governing ESG considerations. The key is to set it in investment policy of fund documents. In that case, it could work. The interesting thing is that in terms of risk management, the environmental, social and governance issues, they are not explicitly mentioned by the law. Not even by the National Bank of Slovakia, but actually the National Bank could say that this is one of the issues that you need to take into consideration by a very simple thing. They need to just issue their own, it's called a measure, it's basically their own normative act, and this way this could get into law, and then it should be applied by the companies as a risk assessment issue. But so far, it does not work. It's not within the actual applicable norms. We have ESG considerations in investment policies in institutions of in IORPS. So this is because again explicit and word-by-word transposition. So this is in Slovak law. These investment strategies, I think this was quite clear from before. Corporate governance code. We have corporate governance code since actually 2008, but 2016 was a major change. Since 2016, there are already interesting issues written there. But the point is that, again, it's a very low volume of companies that has to comply with it. It's basically the companies that are listed on the stock market, which is 20 relevant companies with very negligible volumes, but still it is there. So the corporate governance code, it allows shareholders to mutually discuss issues related to their rights, and there are a few exceptions, of course, market abuse, avoiding competition rules. There are also rules for institutional investors, so they need to publish their corporate governance policies, strategies, procedures of exercising voting rights, also from the CGC. these strategies, they need to include, the policies of intervention in investee companies and the methodology of evaluating effectiveness of these strategies. Also voting records. There is some kind of recommendation of ongoing dialogue between institutional investors and other investors to prevent information asymmetries and conflicts of interest. But as far as I can tell from some of the discussions that I had, it's very negligible, fortunately. Institutional investors should also publish how they deal with significant conflicts of interest, but we were not really able, on those investment firms that we looked at, we were not able to find any specific reports on this. It was only very marginal still. When it comes to publishing information and transparency, also companies, they need to publish non-financial information, entrepreneurial ethics, environmental, and other duties owed to the public order, including social and human rights policies, significant ownership titles of true owners. This actually does not happen too much, only in case of these ultimate beneficiary owners registers that I mentioned. When it comes to product governance, again, very little information so far. National Bank of Slovakia is charged with supervision, but so far there was no data published on sustainable finance. Only first fund was actually labeled as ESG, but there is no specific body that's responsible for this labeling, no kind of association. A funny story, I think it was last year they had a meeting of main bankers and asset managers discussing ESG issues, and the chairman of this meeting, he asked the question, so who knew a year ago what is ESG? And so this is the status of thing. It was not really on the agenda. It became an agenda by EU rules, but it's not really authentically accepted there. So from now, what we already surveyed, a few investment firms and few banks. So there is some information published on selected institutions' web pages, but these ESG criteria are not considered at all, only in specific products, because of always the argument goes, it's low volume, we don't have any information from market participants, from investees, we do not care. It's too expensive. I actually liked the point that Christoph made yesterday regarding the fact that if you're too small, it's almost impossible to do that. And if you consider the volumes on the Slovak market, these companies, if they are pushed even more to do more and more, they will not be able to comply. They will eventually have to give back license. So this is, I think, problematic. If you look at smaller countries, they are unable to comply. Maybe large banks can comply if they are parts of groups, but small independent investment firms, they will not be able to comply. So it's questionable whether then this, we sacrifice competition policy in that case. So this would be, I think, problem. So we'll be more specific in the report, as I will be joined then by some of my colleagues who are not able to join here, not able to join in forming the presentation. But I hope this was interesting, at least in terms of the context and in terms of the voice of smaller countries which have specific issues where we simply do not find this very useful, maybe, and also it may have, if pushed forward more strongly, stringently, it may have anti-competitive effects. Thank you.